Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video for Wednesday, June the 13th. And as you can see here on the screen, I have the daily chart of the S&P. I always like to start there. And you can see, let me pull this up a little bit closer. There's the start of the day. And we were plugging along, and the Fed announcement was right there. And we're chop, not much going on. And then the Fed announced a rate hike and an additional, potentially an additional rate hike. So what does that mean? Instead of 3 rate hikes for this year, they are anticipating the possibility of 4 rate hikes. So we start chopping down, and we're not completely, this probably looks a lot, uglier than it really was. Down here, hit a little support here, had a pretty sharp bounce, and then we kind of rolled over into the close, and look where we stopped, 27.70, 465. The 27.75 level is one area of support that we might hold. I think that it will hold. We'll see. We'll know tomorrow. But let's contrast that to the XLF, which is this is the financials, and again I'm on a 1-day chart here, and you can see kind of the same thing. We chop, and then on the rate announcement, they went straight up here. And as we know, I saw Goldman Sachs was up almost $5 at one point. J.P. Morgan, all the banks, are up because they make more money with higher interest rates, right? And then, as you can see, kind of about the same time as the market kind of peaked out, they started going down. And I don't know if that's from profit taking or if it's just being dragged down with the other markets, because in the S&P, the financials make up, how much is it? 12% or something like that. Maybe it's more than that. I can't remember off the top of my head. But anyway, so that's kind of what we expected. Let's go back here to the S&P and kind of go out a little bit longer time frame. What I want to point out here is that we have been, this is a 20-day chart, and off the low here, 26.75, we stopped at 27.75 here. Now, this is only 20 days, right? So this is more than 100 points, and we're just giving back a little bit. This is nothing out of the ordinary. And again, this should hold, and I think we come back up here. Now 2800 is a little more questionable level. The news today that came here was not devastating by any means or anything like that. So it'll be really interesting to see how things trade tomorrow. But let's go out on a little bit further time frame here. Let's go out to 1 year, and I'll show you what I'm talking about. So this on the S&P, again, we're still on the S&P here. You see the 2800 level? We hit it here, failed, hit it here, failed. We are about to hit it here, and I reference this to the 2750, this level here that we hit over and over, or came close to hitting over and over and over before we finally made it through. And I don't know if that's what happens here. We hit and fail, hit and fail, hit and fail before ultimately going through. I don't know. We'll know probably very soon, I would suspect. But anyway, so how do we play that? Well, I'm still leaning everything bullish. We have earnings season coming up in about 30 days. No reason to think, the economy is doing great and low unemployment and everything's great. So there's no reason to think that this next quarter is going to be bad, right? Generally speaking. So I definitely want to keep playing this to the upside with the thought in mind that, again, here's a 20-day chart. We've been up and away. You can see this kind of stair-step pattern. It would make sense if we pull back some. I don't think we come back to these lower levels here. If we do, then we're going to have there are bigger cracks in the ice than we suspected. The other thing too is that if we compare, I'm going to go back out here to the year chart. So that's the S&P. If we compare the NASDAQ, which has just been on fire, chart looks very similar, except the NASDAQ has much more kind of tailwind and has broken out through some of these upper levels and really gone skyward here, I guess is the best way to put it. We've taken out the old, or not all-time highs, but old highs here. Um, and things look great. Amazon continues to go up. There's Palo Alto and Baidu and some of the names we like just keep going higher and higher. And I don't want to come in and short those names, but I'm very cautious and I am ratcheting up stops. And I'm being cautious here because we could pull back at any time. And I do think if we do pull back, it's shallow. And I actually would use a pullback to pick up some of the names like an Amazon or something like that, probably. Lastly, I want to look at the rut. Now the rut's even more extreme than the Nasdaq. So the S&P was a little tame. The Nasdaq had some pretty good extension here. The rut's got even more extension here. I think as we approach this 1700 level, I think the rut's going to have some trouble getting over that. The rut has some small cap oil stocks, has lots of financials, small caps, etc. So again, I don't want to get bullish. It's very excuse me, I don't want to get bearish. This is a very bullish pattern. However, I would expect some consolidation because these indexes all across the board, we have timing for possible pullback. So just tighten up your stops and be careful here. I am once again, I kind of went through some of this. I beefed up a lot of the positions I had. I'm kind of scaling back down to lighter, fewer number of contracts and things like that, and being a little more opportunistic in the trades I'm doing now. So again, that's the bottom line. Bullish. You want to play it to the upside going into earnings. I'm talking about over the next 30 days or so, 30, 45 days. Definitely want to lean bullish, but be fully aware that we could pull back and and retest some lower levels, and I would use those any pullbacks as a reason to, or an opportunity to kind of get long some of these names. One of the sectors in particular I mentioned quite a few times before is the defense sector. I think it's overdone. I think there's some opportunity there. So that would be names like Northrop Grumman, Raytheon, Lockheed Martin, so forth, Boeing. Love to get more Boeing if it pulled back a little bit more, etc. So that's just one area to kind of highlight. Other than that, again, stay nimble, be cautious, be a cautious bull to the upside. And I hope this helps, makes sense, and I will see you guys at the next one. Thanks a lot, guys. I appreciate it.